What should the money of the future be like? Fast, free, independent of banks, borders, and the decisions of officials. Money that cannot be printed endlessly. Money that lives on the internet and works 24 hours a day, without weekends, holidays, or banking hours. It sounds like an idea from a science fiction blockbuster. But this type of digital currency already exists. On the internet, people used to refer to them as magic internet money. And today the whole world knows them as Bitcoin. And the most amazing thing is, it started almost from zero. It was mined on ordinary computers and debated on forums. Most people didn't even understand why it was needed. And then one programmer bought 2 pizzas for 10,000 Bitcoins. Today, it sounds like one of the most incredibly expensive purchases in all of human history. But back then, it was considered to be just a simple experiment. And this little experiment first reached the value of $1, then it climbed to 1,000, then surged to 20,000, then hit 69,000, and eventually it broke the massive $100,000 barrier and continued to set brand new all-time highs. And all this happened right before the eyes of people who, until recently, considered crypto a toy for geeks. Hi, my name is Victor. Glad to see you on my channel. Today, we'll break down the history of Bitcoin's price as a living history of the market. Euphoria, fear, panic, greed, crashes, recoveries, halvings, institutionals, ETFs, altcoins, and the eternal question, what's next? And if you want to receive essential market insights and information every day that truly impacts the crypto world, you should definitely join my free Telegram channel right now. And for those who trade more seriously, there's a private chat. There, I share full trading setups with entry levels, stops, take profits, and trade logic. I'll leave all the links under this video. The history of Bitcoin is a story of people, money, trust, and psychology. To understand Bitcoin, we need to go back to 2009. The world had just survived a financial crisis, and it was at that moment that Satoshi Nakamoto appeared. To this day, no one knows for sure who it was, one person or a group of people, but it was Satoshi who launched Bitcoin in January 2009. On January 3rd of 2009, the first block was officially mined, the famous Genesis block. Bitcoin emerged as an idea for money without intermediaries, without a traditional bank, without a central issuer, and without a person who can just press a button and generate more currency. In the beginning, Bitcoin had no normal market price at all. It was lines of code, a dedicated forum, and a passionate community of enthusiasts. Mining back then was completely different. There were no huge farms, data centers, or companies worth billions of dollars. Bitcoin could be mined on a regular computer. Initially, the block reward was a substantial 50 Bitcoins, and a new block appeared at a steady rate of approximately every 10 minutes. One of the very first participants in the network was Halving. It was actually he who received the historic first Bitcoin transaction directly from Satoshi on the 12th of January in the year 2009. Back then, it looked like a technical test. Today, it's already a part of financial history. Imagine in the first months, Bitcoin cost so little that for $1 you could get over 1,000 BTC. But back then, almost no one saw the future. Back then, there were no convenient wallets, no proper exchanges, no user-friendly apps, no ETFs, no YouTube analysts, or sophisticated Telegram channels with daily market reviews. So Bitcoin was very much like the early internet, mysterious, technically clunky, and deeply confusing to most people. But it carried a revolutionary and massive concept inside. In 2010, Bitcoin begins to move from the world of code into the real world. Satoshi is very active on the Bitcoin Talk forum, and it's during this specific period that the most legendary purchase in all of crypto history occurs. A man named Laszlo Haniec buys 2 large pizzas for exactly 10,000 Bitcoins. At that time, it was worth only about $40. Today, this famous story sounds almost completely insane. 10,000 Bitcoins for 2 large pizzas. Just stop and think about it for a second. Today, that's worth an incredible $600 million. That's why on May 22nd, the crypto world celebrates Bitcoin Pizza Day. In that same year, 2010, the first exchanges appear. Bitcoin starts trading for a few cents. But the market was very raw. People lost keys, deleted wallets, and didn't understand how to store coins safely. Exchanges were only just being born. There was even a serious bug that caused extra Bitcoins to appear in the network. Developers quickly fixed the problem, and the network continued to operate. By the end of 2010, Bitcoin's market cap exceeded $1 million for the first time. Today, this figure sounds funny, of course, but back then it was a signal. The experiment is gaining real value. And around the same time, WikiLeaks considers the possibility of accepting Bitcoin. Satoshi then writes his famous thought that WikiLeaks had kicked the hornet's nest and that the angry swarm was now headed directly our way. Shortly after that moment, Satoshi gradually begins to disappear from view. He simply leaves the public space for good and never returns to it again. And then the most interesting part begins. In 2011, Bitcoin reached parity with the American dollar for the first time. One Bitcoin was valued at exactly $1. Today, that sounds quite funny again, but back then, it was a significant psychological barrier. Then the price accelerates to around $30. Bitcoin surges by almost 100 times its value, and then it drops by 90%. And that was the exact moment when the crypto market finally revealed its true character. And as we already know, this scenario will be repeated many times. In 2012, the first Bitcoin halving takes place. The Bitcoin halving event is when the block reward given to miners for verifying a new block is cut in half. At the very beginning, miners received 50 Bitcoins per block, but after the first halving, it was reduced to 25. Simply put, fewer new Bitcoins start entering the market, and when the overall supply decreases, the market naturally values that scarcity differently. That is exactly why the halving has become one of the main themes of every major Bitcoin market cycle. Bitcoin is strictly capped at a hard limit of 21 million BTC. It cannot be printed or inflated endlessly at will, and more coins can't be added just by a unilateral decision made by government officials or a central bank. And this fundamental idea of scarcity will eventually become one of the main reasons why Bitcoin is widely called a form of digital gold for the modern era. In 2013, Bitcoin experiences its first real explosion. The price first flies to hundreds of dollars and then passes the $1,000 level for the first time. For the early market, this was a shock. An asset that recently cost cents is now worth more than $1,000. Media, investors, companies, and the first big success stories appear. And in that same year, one of the most famous words in crypto is born, HODL. It appeared because of a typo in an emotional post on a forum. A person wanted to write hold, meaning to keep, but wrote HODL. And this mistake became a meme, a philosophy, almost a religion for many Bitcoin investors. But the market quickly reminds us that there's no such thing as easy money. China introduces restrictions for financial institutions working with Bitcoin. The price falls and fear begins. And in 2014, one of the most painful blows to the market occurs: the collapse of Mt. Gox. At that time, it was the largest Bitcoin exchange. It suddenly collapses. Hundreds of thousands of Bitcoins just vanish into thin air, people lose their money, and trust in the market takes a huge hit. The end. But again, an important detail: the Bitcoin network itself was not hacked. The infrastructure around it collapsed. After that, the market enters a bear market. The year 2015, extreme boredom, disappointment, and very low prices. Most people don't want to talk about crypto anymore. Bitcoin could be seen around a couple $100. But it's exactly these periods that often turn out to be the most important. When there's no hype, when no one's shouting about quick multiples, when the media writes again that it's all dead, when the crowd has lost interest, that's usually when the foundation for the next move is built. While the public is bored, developers are working. While some leave, others are quietly accumulating. In 2016, the second halving occurs. The miner reward decreases from 25 Bitcoins to 12.5 Bitcoins. The market gradually comes alive. the price approaches $1,000 again and more infrastructure appears. The Lightning Network is discussed more actively, a solution for faster and cheaper payments in Bitcoin. But the problem doesn't go away. The infamous Bitfinex hack of 120,000 Bitcoins serves to remind the market of the fundamental principle: not your keys, not your coins. Meaning, not your keys, not your coins. If you keep Bitcoin on an exchange, you're trusting not just the Bitcoin network, but a specific company. And now we're approaching 2017, the year of the crypto boom. Bitcoin breaks through $1,000 and a massive growth begins. Friends, news, bloggers, and random people who weren't interested in markets yesterday are talking about crypto. And by the way, that's the precise moment in time when I started very actively trading on the crypto market myself. The ICO boom emerges. Altcoins are flying, newbies enter the market with greedy eyes. It seems that everyone wants quick multiples on their investments. When Bitcoin almost reaches the $20,000 mark, that was the exact moment it first became a truly global mass phenomenon. But when the market gets far too greedy, the situation becomes incredibly dangerous. Then, in 2018, the massive bubble finally bursts. Bitcoin falls for almost a whole year and drops to around $3,000. The ICO boom collapses, countless weak projects disappear, and everyday retail investors learn a painful lesson. Critics declare Bitcoin dead once again, but the underlying technology continues to develop steadily. The Lightning Network grows, the infrastructure becomes more robust, and the entire market matures. And here, one of the most important lessons of Bitcoin's entire history finally emerges. The price can take a sharp dive very quickly, however. That does not mean development has stopped. In the year 2019, the recovery begins. Bitcoin climbs steadily from the bottom to $13,000 mark. More institutional interest is emerging, custodial services are developing, as are futures and infrastructure for major players. The market is still highly volatile and risky, but it's no longer as wild as it used to be. And this is exactly where the conversation about Bitcoin as a separate asset class begins. And that was most likely the turning point. And such recovery periods are particularly fascinating and significant for a trader, because that's where it's important to carefully analyze not only the price, but the overall market structure. Where the liquidity is, where the strong levels are, how Bitcoin dominance is behaving, and which alts are starting to wake up. In the private chat, I analyze exactly these things in a practical format: scenarios, levels, setups, and risk. Without promises of easy money, of course, just market logic. Bitcoin is becoming a major global asset. The year 2020 changes everything. Pandemic, panic, markets are crashing. Bitcoin is also dropping sharply, along with various other assets. And then everyone thinks again that Bitcoin is finished. But then a new chapter begins. Central banks print huge amounts of new money, liquidity floods the global markets, interest rates remain at historic lows, investors seek protection from currency devaluation, and Bitcoin gains a powerful new image: digital gold. In 2020, the third halving takes place. The miner reward drops from 12.5 BTC down to 6.25 BTC. And then the firm MicroStrategy, led by Michael Saylor, enters the cryptocurrency market. The company starts buying Bitcoin as a reserve asset. Many market speculators begin to view it as a legitimate part of the corporate treasury. By the end of 2020, Bitcoin is rapidly approaching the mark of $29,000. And then the year 2021 finally arrives. Tesla buys Bitcoin. Elon Musk tweets about Bitcoin. Michael Saylor gives one interview after another. Institutional interest grows. The price hits a new all-time high of around $69,000. El Salvador officially became the first country in the world to recognize Bitcoin as legal tender. It was a deeply significant and powerful symbolic moment. For the first time, an entire country officially said Bitcoin is now a fundamental part of our monetary system. But that same year, a heavy blow arrives. Authorities in China have banned Bitcoin mining. The hash rate drops, the price comes under pressure. Many are saying again that it's over. But the opposite happens. Mining operations shift to other countries. The entire network recovers and the hash rate recovers. Bitcoin is becoming even more geographically distributed across the globe. So essentially, Bitcoin has continuously and resiliently adapted to any market conditions. But just like market conditions, market cycles also change. And then comes 2022, a year of pain. The industry witnessed Terra Luna, Celsius, and the massive FTX bankruptcy, leading to widespread panic, lost money, and a total collapse of trust. Many people mistakenly thought they truly owned their Bitcoin, but in reality, they held the asset on centralized platforms that later completely collapsed. And the market reminded us once again of the golden rule. If you don't personally control the keys, you simply don't control the coins. The Bitcoin network itself continued to work, but the companies around it fell one after another. The price dropped significantly and fear was at its peak. Many left the market again, but it's during such periods that the best lessons are born. A trader begins to understand that the market isn't just about entries and exits. It's risk management, discipline, liquidity, psychology, and understanding where you even are in the cycle. And I often talk about all of this in detail on my Telegram channel. Moving on. In 2023, the market begins to come alive. Bitcoin gradually regains its position and rises to approximately $38,000. The main topic is the anticipation of spot Bitcoin ETFs in the US. BlackRock and other major players are entering the scene. Bitcoin is once again becoming a topic for Wall Street. The year 2024 becomes a truly historic year. In the United States, regulatory bodies finally granted approval for a spot Bitcoin ETF, and a significant new bridge between the old financial world and the new digital financial world was officially opened. Now, an investor doesn't necessarily have to set up a wallet themselves, store a seed phrase, and deal with cold storage. Through an ETF, they can gain access to Bitcoin through familiar financial infrastructure. In the same year, another halving takes place. The miner reward decreases from 6.25 BTC to 3.125 BTC. The market crosses the psychological milestone of $100,000. For people who remember Bitcoin at $1, at $30, at $1,000, or even at $20,000, this is already a completely different level of perception. And in 2025, Bitcoin hits a new all-time high above $125,000. After all the drops, bans, exchange collapses, bear markets, criticism, and hundreds of Bitcoin is dead statements, it proves its resilience once again. However, at this specific point, you must be careful not to lose your cool. After strong growth, the market inevitably becomes quite dangerous for those who come without a plan. Euphoria creates the illusion that the price will rise forever. But then a correction happens, and in 2026, the market goes through a significant cooling off phase again. This doesn't look like anything unusual for Bitcoin. It's just another reminder that even the strongest asset doesn't always grow in a straight line upward. Many beginners only look at the price of Bitcoin, but for a trader, that's not enough. You need to understand where the capital is moving within the market. When Bitcoin dominance rises, it often means that money is flowing into Bitcoin more strongly than into altcoins. During such periods, alts can look weaker, even if Bitcoin itself is growing. And when dominance starts to decline after a significant and powerful Bitcoin move, some capital may flow into Ethereum, large alts, and then into increasingly riskier market sectors. That's exactly how altcoin cycles emerge. But there's a dangerous trap here. People often rush into altcoins far too late in the game, when the main momentum has already passed. They buy because they see everything flying, and then they get caught in a sharp correction. So for me, Bitcoin dominance is one of the key criteria for liquidity movement. These are exactly the kinds of things I regularly analyze in the private chat. Where does Bitcoin look stronger than the market? When do altcoins start to wake up? Which specific setups look logical right now? And where is it actually better to wait for further confirmation? If you look back at the entire history of Bitcoin, we'll see one very simple thing. Every major stage seemed final at the time. After the crash of 2011, many people thought it was all over. After the Mt. Gox collapse in 2014, the market was buried once again. After the crypto winter of 2018, they said interest in Bitcoin had died. After FTX in 2022, many lost faith in the industry. And then came the ETFs, institutional investors, new highs, and a new market phase. But Bitcoin's uniqueness isn't that its price always goes up. That's not true. Bitcoin can crash very painfully. It remains a highly volatile financial asset. It can offer significant financial opportunities, but it just as easily severely punishes those who come without a strategy. So the question isn't whether Bitcoin is good or bad. The question is something else. Do you have a plan or not? Do you understand your horizon? Do you know where you enter, where you take profit? What do you do if the market goes against you? How much are you willing to lose if the scenario doesn't work out? Are you an investor or a trader? Without these answers, even the strongest asset can become a problem. Bitcoin's history teaches a simple thing. In this market, it's not the one who shouts to the moon, the loudest who survives. A true market survivor is the one who truly understands the art of waiting, who doesn't buy only on euphoria, who doesn't sell only out of panic, who understands cycles, and who deeply respects the inherent risks involved. They are the ones who look at the market more broadly than just one single candle on a chart. Someone once bought 2 pizzas for 10,000 bitcoins. Someone else sold BTC at $100 and was happy. Someone bought at the absolute all-time high and then waited many years for a recovery. Someone was buying when the rest of the world was paralyzed by fear. Everyone in this story has their own price, and that's Bitcoin in a nutshell. It is not just an investment asset. It is a true test of your character, a test of your patience, discipline, beliefs, and the skill to think several steps ahead of the crowd. Bitcoin first started as a simple idea, then it evolved into a daring experiment, then it grew into a market, then it transformed into digital gold, then it became a significant global macro asset, and now it has finally become a part of the very financial system it once tried to bypass. That is the main paradox of its journey. Bitcoin originally emerged as a revolutionary alternative to the traditional financial world. And now that old world itself is coming to Bitcoin through spot ETF funds, corporate balance sheets, and institutional products. But the question remains open. Will the 4-year cycles continue to persist in their previous form? Will the halving still have such a strong impact on the market? Will ETFs and large institutionals change price behavior? What will happen to Bitcoin's dominance in the next altcoin cycle? And how will the market react to the next halving, which is expected in 2028? We'll only see the answer in time. But one thing is already clear. Bitcoin can no longer be ignored. You can believe in it, you can criticize it, you can trade it, you can hold it long term, you can wait for a correction. Bitcoin has come a very long way from a price of less than 1 cent to an asset discussed by funds, governments, and ordinary investors worldwide. I'm sure the most important chapters of this story are still ahead. If you found this interesting, give it a like, subscribe to the channel, and let us know in the comments. Do you think Bitcoin has already seen its main growth, or is the next big cycle still ahead? And if you want to dive deeper and understand how to consistently make money in this market, join my private chat. Just the market, risk, logic, and practice. This was Victor. See you in the next video. And remember, the history of Bitcoin is still being written.